Gracias. Good morning, and welcome to the 11th edition of the Spain Investors Day. On behalf of Estudio de Comunicación, owner of this event, our strategic partners BNP Paribas, Exane BNP Paribas, our sponsors Grant Thornton, Endesa, CaixaBank, and Prisa, and our collaborators BME SIX, ICEX Invest in Spain, Equipo Económico, Aon, ECO, and Linklaters, thank you all for your attendance. For safety reasons and following the required restrictions from the COVID-19 pandemic, this event has multiple venues this year. The institutional events are taking place at this auditorium. Face-to-face meetings between investors and companies are being held at BNP Paribas Central Office in Spain, and one-on-one meetings are taking place online from the offices of the 46 Spanish companies and the 250 international investors from 14 different countries participating in this event. We now especially welcome the third Vice President and Minister for the Economy and Digital Transformation, Nadia Calviño. From this moment and on, during the intervention of the Vice President, all of the investors that are following the event online, as well as all of you present at this room, may send your questions to the chat that is available in our digital platform, or write them in the cards that have been provided. Later on, I will select some of these questions and ask them to the Vice President. I would like now to introduce you to Mr. Ramón Galcerán, Chairman for Grant Thornton España. With more than 56,000 people in over 140 countries, Grant Thornton stands as one of the world's largest independent accounting and consulting member firms, which provides assurance, tax, and advisory services to privately held businesses, public interest entities, and public sector entities. Mr. Galcerán, yours is the floor.
Thank you. Your Excellency, Vice President Third, Minister for the Economy and Digital Transformation, President of the Spain Investors Day, dear friends, ladies and gentlemen, both to those present and all those who are kindly following us online, welcome and thank you for being here. Welcome to the second day of this 11th Spain Investors Day conference. This economic and financial event, which Grant Thornton joined since its first edition, has now become a key milestone that companies, investors, and institutions watch very closely at the beginning of each year. It is an exceptionally useful forum for comparing forecasts, learning about the country's economic plans, and most importantly, testing the most attractive opportunities available to the most qualified investors. A year ago, at this event, we explained to the financial community a true story of recovery. The Spanish economy had been on a path of readjustment and ascent since 2008, when the first Spain Investors Day actually was held. Just a few weeks later, everything dramatically changed. What occurred disrupted all our forecasts and brought us up against what is perhaps the greatest health, social, and economic challenge of our recent history. Almost a year later, We're still dealing with the pandemic and an exceptional economic situation. We continue to work every day to bring an end to the most negative consequences of this period as soon as possible. We still have a long way to go, but today, at my first opportunity to address you as President of Grant Thornton Spain, please allow me to hold on to my optimism. I do so because our companies, the companies the firm works for side by side in more than 140 countries, are passing such optimism on to us. Our latest macro research data, obtained just last December, reflect high levels of optimism in the Spanish executives. There is less uncertainty about the economy's progress. They are confident that their profits will be higher than in the first half of 2020, and they are willing to clearly strengthen their exports. Improvements are moderate, but clearly show a general tendency among Spanish companies to capitalize on all available tailwinds. Our country's efforts right now are aimed at immunizing a significant proportion of the population using all available vaccines in the next coming months. We all hope that these actions will be sufficient for the most affected sectors to bounce back as soon as possible. Our objective should be to create a virtuous circle of recovery, releasing accumulated cash and reactivating consumption. I am aware that COVID-19 situation, which has worsened in the last few days, is a new hurdle. But we have to be able to save as many companies as possible, making use of all the financial and strategic resources available to us. We can do this, as the Bank of Spain points out, by extending the government aid available to them, by helping them restructuring their debt, or by facilitating and speeding up insolvency proceedings. Furthermore, Spain is in a position to grow more solidly if it makes effective use of the stimuli that Europe has made available: fiscal, banking, and political stimuli aimed at overcoming this pandemic effectively. These recovery and resilience funds in the Next Generation Plan and many other facilities that will gradually be released by Brussels are not money to plug holes in the short term. They are an opportunity to give a decisive boost to our productivity model towards a more circular, sustainable, and technological economy. They require a country's vision, but also a visionary country, with companies and governments working together to design our future starting this very first year. Let's not waste this opportunity. As you can see, I have not talked about forecast. To do this, I will give the floor to Ms. Nadia Calviño, Minister for the Economy and Digital Transformation and Vice President Third. She will provide you with the most updated growth data currently held by the government, as well as the policies and reforms that will set the economic course for the coming months. We must also remember the technological dimension, which many of our companies have been capitalizing on in recent months, and in which, in my opinion, will impact our most immediate future, hopefully our best future. I would like to end by sharing a personal sensation. I have attended Spain's Investors' Day for 11 years, and I can assure you that today I sense the same spirit that brought us together for the first time in 2008. The spirit of a country that wants to overcome the challenges by enhancing its virtues, a country that is able to find its best version, a country, Spain, once again ready to go beyond. Madam Minister, you have the floor.
Ya lo pongo yo. Gracias. Tengo yo el vaso, le he traído el vaso. He traído yo el vaso. Fenómeno. Buenas tardes a todos. Good afternoon.
It is a very great pleasure to be here today and to have the chance to participate once more in this very prestigious event. And I am particularly happy from a personal point of view to be able to do it physically, to be with you today. The pandemic, together with an unprecedented snowstorm in Madrid, that's why I was a bit late, have posed, I know, very serious challenges to the organizers. So I want to start by congratulating and thanking you for your effort and for the success of keeping this event at least partially in the different sites which are being used today across Madrid, on top of the video means which we're increasingly used to these days. Now, as you just said, the Spain Investors Day celebrates the 11th edition, and as usual, it is considered to be a key milestone to kick off the year here in Spain, in the financial world. And the best proof, I think, of the interest raised by this event is the number and relevance of the attending audience, and of course, the excellent representation of speakers, including many representatives of the government. Of course, the King, and this provides a very good testimony of the importance we give to these kind of events, especially in times such as these, where public-private partnership, public-private cooperation is of the utmost importance to set in motion the important investment and reform plans to reactivate our economy. As you were speaking, I was thinking, when I participated last in this event 1 year ago, it seems like another life, another reality. The new government had just been formed in Spain. We were about to start working again after many months of caretaker mode. And at that stage, nobody could have anticipated that the world would be hit, disrupted by the pandemic, that we would have to focus all our energy in 2020 in responding to the sanitary, economic and social crisis that started in March 2020. 12 months ago, it is true that my speech already was talking about uncertainty being one of the key words that would mark 2020. I was talking about a very complex, very challenging international environment, but, well, I think it's only fair to say that the word uncertainty has taken a wholly new meaning since then. And many of the situations that have marked the last 12 months have been very different to the ones we would have anticipated last January. Many have faded away. Maybe some of the top priorities or top concerns that we had have been fading away. Others, new ones, have arisen. Notwithstanding the fact that it is impossible to anticipate unforeseeable developments, and now we know that for sure, when we put forward our macroeconomic forecast for 2021, and that was last October when we presented the draft budget for 2021, we already highlighted 4 key downward risks to the economic recovery in Spain in the course of 2021. First risk, the evolution of the pandemic. Our forecast contemplated sufficient vaccination in the second part of the current year. At the time, of course, we didn't know how the vaccination process would unfold, would develop. We did not know that we would already have vaccination underway in December in Europe. This week, we will finish vaccinating nursing homes. Second shots will already start being administered as of Sunday. And we have not only 1, but 2 vaccines authorized and more on the way. This is obviously good news and brings light to economic prospects, although, of course, we still have very difficult weeks ahead of us. The second risk we identified back in October was geopolitical and commercial tensions. And this has also improved in recent weeks with the EU-UK Brexit agreement, with the election process in the United States, although, to be fair, stress and uncertainty has been kept until the very last moment. But the developments since October have also gone in the positive direction on this front. The third risk we identified was possible delays and difficulties to implement the national recovery plans. Since October, there has been political agreement on the legal texts in Brussels. The national ratification processes are underway. We are working intensely in finalizing the Spanish recovery plan. And in December, the budget for 2021 was passed. It is an expansionary budget to support the economic activity and job creation, and it is also a very significant milestone from the financial stability, from the investor's point of view, because we have for many years lacked a fiscal framework which would be operational from 1st of January until 31st of December of the year. Furthermore, we already adopted in parallel an executive order, a royal decree law, to accelerate administrative processes and ensure a swift implementation of public investment under the National Recovery Plan. Last but not least, the fourth risk we identified was the risk of hysteresis, that is, the risk that the economic hibernation would lead to more permanent and deep structural damage in our economic tissue. And that is why, from day one, I was recalling today that the first package of measures we adopted to respond to the pandemic was adopted on March the 10th, 2020. From day one, we acted in a very decisive manner to provide liquidity to the whole economy, to set in place a short-term work scheme known as ERTE. I know Minister Escrivá already explained and talked about it yesterday. Mechanisms that have provided an unprecedented protection for companies and workers, as well as for household revenues, establishing also special support measures for self-employed workers, autónomos. And this triple safety net has been very effective to ensure that there is a solid basis for a strong recovery in the course of 2021. I will come back to this in a moment. So, in a nutshell, to sum up, all four downward risks have mitigated during the last months, and we are now moving in the right direction on four of them. But that obviously doesn't mean, and I want to emphasize that the coming months will be easy. We still have to keep controlling the spread of the virus, and we have to continue working to protect enterprises, jobs, and family incomes, as well, of course, as supporting the most vulnerable parts of our societies. We also need to start deploying the unprecedented 39 billion euros in public investment foreseen in the budget for 2021. But the truth is, we start to see the light at the end of the tunnel. Now, taking into account all these considerations and keeping in mind that forecasting is now more difficult than ever, and that much has changed since we presented our economic forecast in October, the Spanish government expects GDP to grow around 7% in 2021. And to continue the path of job creation that we initiated in the third quarter of 2020. This is our inertial growth forecast without taking into account the potential impact of the investment plan and the European funds that should flow in the course of the year. Indeed, the performance of the Spanish economy during the third quarter of last year surprised all analysts, with a 16.4% quarterly growth, according to the National Statistical Office, and job creation reaching around 570,000 jobs from June to August. And this is remarkable, since, allow me to remind all of us, the third quarter of 2020 was everything but normal. We already had some serious second wave outbreaks in important powerhouses in Catalonia, Aragon. There was no international tourism, which everybody knows has a material weight in our economy. But despite that, enterprises and self-employed workers demonstrated strong resilience and were able to reactivate in a very fast and decisive manner once the stricter restrictions were lifted. Once more, like in previous economic crises, Spain bounced back strongly. And conversely to other countries, available data indicate that this positive trend continued during the last quarter of 2020, especially in the labour market. Social Security affiliation has maintained an upward trend in October, November, and December. Besides, workers protected under short-term work schemes stabilized around 750,000, despite the second wave of the pandemic. And self-employed affiliation has recovered pre-pandemic records. All of this means that the impact of the second wave in economic terms has been less profound than the one we suffered in the spring, in the first wave, and also that the recovery process has started and will accelerate in 2021. It also means that the set of measures we have been relentlessly put in place since March are effective in protecting our economic tissue and employment, and therefore to avoid structural damage. Liquidity and direct support measures amount to 20% of GDP. Together with the impact of automatic stabilizers, they led the Treasury to issue an extra 110 billion euros in sovereign debt in 2020. Although larger amounts of support were announced in other countries, the truth is that actual support effectively provided in Spain is one of the highest amongst the large European economies and one of the most effective. And this is not according to our analysis, but according to the ECB analysis of impact of the support measures implemented. We acted fast in a decisive manner, as I said, also in an efficient and effective manner, setting in place a basic architecture of instruments that have been adjusted according to the needs and have channeled funds directly to the real economy and families. Two of these initiatives have proven to be especially useful. First of all, the 140 billion euro public guarantee scheme channeled through the National Development Bank, the ICO. I'm sure this was explained yesterday by the president of the ICO, and through the financial sector. This instrument has already allowed the channeling of more than 115 billion euros in credit to 600,000 companies, mainly SMEs and self-employed workers, helping them to face their liquidity and investment needs during these difficult months. It is worth pointing out that this time around, the Spanish financial sector is in good health and able to contribute to the solution. Last December, we extended the maturity and grace periods for these credit lines so that we make sure enterprises have enough time to recover before they have to face their financial obligations, and in order to avoid a somewhat artificial solvency problem which could have a macroeconomic impact. We also established a 10 billion fund to support the solvency of companies in strategic sectors and are, of course, working on additional instruments to avoid the failure of companies which would be solvent without the pandemic, while not stopping the necessary restructuring process once the exceptional moratoria finish. The second element was the exceptional public support granted to short-term work schemes, the ERTEs I was referring to a moment ago, and the extraordinary allowance for self-employed workers, for autónomos, which have covered around 5 million workers at the peak of the first wave last spring. Many doubted that such a tool, the ERTEs, would work in a country such as Spain, with such a strong weight of services and SMEs. But companies have seen in these months that this is a good temporary solution, avoiding the massive job destruction of previous economic downturns, preserving human capital and allowing them to reopen, to be reactivated as soon as restrictions have lifted, as we saw during the third quarter of last year. Around 80% of workers have already returned to their jobs, and despite the shift in the composition of these furlough schemes due to the second wave of the virus in the autumn, the number of workers covered has stabilized at around the 750,000 I was mentioning, very far from the peak in the spring. According to our estimates, measures taken since March have prevented over 3 million layoffs and have protected, therefore, the incomes of thousands of households and companies in our country. Looking forward, we need to see whether this instrument should become a permanent feature of the Spanish labour market in order to allow companies to have flexibility, internal instruments, avoiding the massive layoffs and the volatility of jobs and job creation and unemployment in our country, which is one of the characteristics of the Spanish market, which we saw in all previous economic crises. Let me turn to the 2021 priorities. First priority of all, and it's obvious, and you mentioned it yourself, the first priority is, of course, controlling the pandemic. Since we all have seen and we have learned that economy and health go hand in hand. We cannot have one without the other. And so we will need to continue to fight the pandemic and support companies, support workers and families in the coming weeks and months, knowing that the safety nets we have designed work, and that with the appropriate stability at the European level, we can go back to strong growth in the course of 2021. The vaccination plan is a very important step forward, but it will still take some time until we reach a sufficiently large share of the population immunized. So we need to hold the precautionary measures and our masks a little bit longer to ensure that we control any outbreak in the best possible way. The second priority is implementing the 2021 budget. There is unanimity at international level in the view that both monetary and fiscal policies need to focus now in supporting growth. That is why we adopted an expansionary budget with an unprecedented investment level to mobilize private investment and accelerate the twin green and digital transitions. I know Vice President Rivera was also talking about this extensively yesterday. And that is also why the budget increases social expenditure to try to fight the clear risk that this crisis widens inequality and affects disproportionately, again, the most vulnerable in our societies, women and the young. Inclusive and sustainable growth are not empty words that are incorporated in all international statements and recommendations. They have to be guiding principles that need to be reflected in our policies. Besides, there is, along the same lines, the need of third priority is obviously finalizing, getting adopted, deploying our National Recovery, Transformation and Resilience Plan. This plan, the thrust of the plan, was presented by President Sanchez on October the 7th with 4 strategic objectives: advancing the ecological transition, improving, increasing, dynamizing, accelerating the digital transformation, supporting social and territorial cohesion, and also pursuing the gender equality agenda. With this in mind, we worked very hard in the last months of 2020 on the detail of the 30 components of the National Recovery Plan. That is, on the specific investments and reforms, projects that will have a large impact on our economic activity and also act as levers for change. Let me take a moment to stress this. The Spanish Recovery Plan contemplates more than 60 billion euros in investment between 2021 and 2023 to be funded by transfers allocated from the EU Next Generation EU Recovery and Resilience Facility, to be complemented by recourse to the more than 70 billion loans up to 2026. And these public investments will be deployed together with a coherent set of structural reforms, ranging from educational and vocational training to energy, from the labour market to pensions, from an improvement in business climate and better regulation to fiscal reform, from sustainable mobility to the modernization of public administration, including, and this is an issue that has just been mentioned, so it allows me to confirm it, including a modernization of the insolvency rules. Structural reforms should allow us to increase potential growth above 2%, should allow us to reduce structural unemployment, to increase productivity and move towards a more inclusive and sustainable growth pattern from the economic and financial, but also from the environmental and social points of view. We aim to present this plan to the European Commission as soon as the legal process allows. And we are confident that the Royal Decree Law adopted in December to articulate and accelerate the implementation of the plan will speed up this deployment of investments and reforms starting already in January on the basis of the 2021 budget, while funds will flow from the European Union in the course of the year. Public-private partnerships will be key to implement the leading programs. I am talking, for example, about a more than 5 billion massive building renovation program for energy efficiency, the more than 1.5 billion green hydrogen roadmap, the more than 12 billion sustainable mobility program, including the completion of the strategic access for train transportation in Spain, a very significant investment in SME digitalization, the digital skills plan, the digitalization and modernization of the public administration plan. We will shortly be presenting publicly these plans. 4 billion for 100% broadband coverage and 5G deployment. 1.9 billion for upgrading vocational training. 2 billion for active labor market policies. We expect the recovery plan to mobilize a very significant volume of private investment too, more than 500 billion euros in private investments. And the key ministries have already started to deploy their programs as of 1st of January, thanks to the good preparatory work that we did in the second half of last year, immediately after the announcement in Brussels of the EU recovery plan. For instance, just to mention the ministry that I'm responsible for, we presented last July our digital agenda, España Digital 2025, Digital Spain 2025, that contains the main plans, the main working lines, the 10 key axes for the digitalization of our economy and our society. And Spain has a very good position to lead this process with extremely strong infrastructures, leading companies in key sectors, and a good starting point also in e-government. 1/3 of total investment in the recovery plan will be directed to digitalization. And we have already presented 3 specific plans for 5G, connectivity, and the National Strategy for Artificial Intelligence. The remaining 3, as I said a moment ago, will be presented shortly for SME digitalization, public administration, and digital skills. The yearly budget in this area has multiplied by 6. And we yesterday launched already the first call for interest to ensure 100% broadband coverage in Spain and the acceleration of 5G deployment with a second call for interest for SME digitalization to follow in the coming days. Likewise, other calls for interest have been launched to start identifying projects and preparing the formal process for implementation, for instance, in the areas of green hydrogen, industry transformation, electric mobility, and the fight against rural depopulation. I'm sure ministers participating in previous conferences yesterday have already talked about them. Cooperation with all levels of administration and stakeholders is key. And that is why we're also convening different fora to listen to stakeholders, to explain, to share, to allow for the appropriate participation of the different levels of government. Tomorrow, I will be chairing a 3rd meeting of the specific table of social dialogue to bring together labor unions and corporate representatives to articulate their participation in the deployment of the recovery plan. Because this recovery plan is a huge challenge, but also a unique opportunity to modernize our country, to put forward the reforms that everybody agrees are indispensable for the present and, more importantly, for the future of Spain. This is not new. For the last more than 2 years, we have deployed a well-known and coherent reform agenda. We have continued to work on the midterm reforms in parallel with fighting the pandemic during 2020. And this reform process will accelerate, obviously, in 2021 with in parallel to the acceleration of structural challenges in the world economy related to climate change and digitalization. Let me finally touch upon the financial outlook. It is very clear that all measures adopted to fight the pandemic represent an important fiscal effort on the part of Spanish citizens. I referred already to the impact of the measures adopted, this additional expenditure as a share of GDP, the additional debt issued in the course of 2020 by the Spanish Treasury. It is worth mentioning that we took an extremely prudent approach, and thanks to the better-than-expected tax revenues, the final amount ended up being 20 billion less than we calculated when the pandemic started. Thanks to record low interest rates, financial cost dropped below 2% of GDP, and we were able to continue extended average maturities of the portfolio above 7.7 years. So, despite this exceptionally challenging situation, thanks to investor confidence, and of course, thanks also to the action of the European Central Bank, we have been able to improve long-term fiscal and financial sustainability. Net issuance in 2021 will amount to 100 billion euros. This is 10 billion less than we anticipated when the budget was presented, and around 30 billion in debt costs. Again, this is an extremely prudent approach, as we did last year. And actually, we have started the year on the right track with a very successful 10 billion syndication of a 10-year bond yesterday, issued at an interest rate of 11 basis points. I think the quality of the demand at that price was extremely high, with foreign investors taking almost 80% of the bond. And this shows that international capital markets trust, they have confidence in the Spanish economy. One of the main novelties regarding the Treasury for this year will be the issuance for the first time in our country of between 5 and 10 billion Treasury green bonds, building on the positive experience of the National Promotional Bank, the ICO, in 2019 and 2020. And as to the issuance strategy, we will keep, of course, the same priorities as we have in the past 2 years. We need to continue reducing our financing cost to reduce the average cost of the portfolio and extend the average maturity. Two final points from my side before I take your questions to sum up. The first point is that we still have difficult weeks ahead. The pandemic is still a reality. We must keep following all the sanitary measures to reduce infections and to control the spread of the virus as we advance in the vaccination process. We also need to be very alert to help our enterprises and workers to resist until the crisis is finally over, as we have been doing since the very first moment, and we will continue to do in the coming weeks and months. The government is absolutely committed to this endeavor, to this objective, since this has been the best way, and all data confirm it. This has been the best way to preserve the basis for a strong recovery in the course of 2021. And this is my second point I'd like to convey to you, is that we are determined to make 2021 the year of the recovery and transformation of our country. I see, and I'm sure you have seen it too, the positive energy already mobilized by the National Recovery Plan. The number of investment projects that companies, large and small, are putting together, are bringing forward, they want to develop in the course of the year. The social consensus built around the key areas for investment and reform. The need to undertake these investments and reforms now to be able to face the challenges that we have inherited from the past, current challenges and challenges related to the future. We must build on this basis, and I count to all of you, for investment is absolutely key to contribute to this aim, so that Spain leads the process to build a more sustainable and inclusive, a greener, more digital, more equal and fairer world. Let me close on this note. Thank you very much.
Thank you very much, Vice President. With your permission, we now proceed to ask you the questions that we have been receiving live as you were speaking, as well as others that we have already received earlier today. An investor from London has asked about the EU funds that Spain is going to receive. You have already mentioned this. His question goes as follows. Spain is expected to receive European funds of up to 140 billion euros in the next 6 years. As international investors, we have certain concern that the resources will be managed under a social and political criterion and will not effectively reach Spain's productive network. How are those resources going to be distributed?
Mm-hmm. So 3 main comments in this regard. Firstly, I would invite all investors to read the recovery plan. We have published October the 7th, when the President Sanchez presented it. We have published a Spanish and an English version on the media, so they can read what are the 30 components that we will be focusing our investments and reforms in. And they are going from, as I said a moment ago, infrastructures, green, sustainable infrastructures, to a massive renovation program, preserving our environment, preserving our ecosystems, but also deploying sustainable mobility instruments, renovating local infrastructures, also driving digitalization, artificial intelligence, upgrading our education and vocational training systems, upgrading our science and research systems, fiscal reform, a labor market reform, pension reform. You have all the basic elements there, which will be developed, of course, as we elaborate on those 30 elements when we present finally and formally the month, as soon as the EU adopts or finalizes the formal process. That's my first comment. My second comment is that from day one, we have been emphasizing that public-private cooperation is absolutely indispensable. Our aim through these investments and reforms is to mobilize private investment, and therefore we want to do it together with the private investors. And I have seen enormous appetite and interest, enormous dynamism also in the ecosystem of Spanish companies that are absolutely committed to accompanying us in this process. I think we have identified our priorities well. We have been, for many months, listening to the different stakeholders to identify these programs and priorities. And in those areas where we still don't have a too clear view about how to implement in the most effective manner those investments, we are launching the calls for interest. And this brings me to my third point, which is we have established consultative committees with the main stakeholders. For example, in my area, we have one for telecoms and for digitalization, where companies, unions, many small businesses, consultants, they all participate and they provide their input and they listen to our plans. We have, on top of it, opened up different channels of transparency, and we are doing it in a very clear manner through these calls for interest, and of course following normal procedures for public markets, but in a more efficient manner than in the past, thanks to this executive decree law that was adopted last December. So my main key message is one of reassurance and confidence that I think together with the private sector we will be able to implement this very ambitious investment and reform plan. Thank you.
Another investor from the UK is asking about the Spanish debt. His question goes like this. According to the European Central Bank estimates, Spain's debt GDP ratio will be above the 8% by the end of 2022, while the average of the European countries will be that of 3%. Do you agree with this estimate? What is Spain's strategy for reducing its debt?
Well, the debt to GDP ratio has jumped in all European countries in the course of 2020, and this situation will extend to 2021. I explained very clearly the effort we have all made to put in place a safety net that would preserve the basis of our economic activity so that we could have a strong bounce back, a strong recovery in the course of 2021. This is the priority, and this is going in the right direction, because our priority should be to stimulate economic activity and job creation in the coming months. Now, we are absolutely committed to a fiscal responsible path, as we did in the previous years, and we were on the right track when, unfortunately, the pandemic hit our economy. And so already in 2021, we expect that thanks to strong growth, we will be able to start reducing our deficit and debt to GDP ratios. This is, as I was saying, mainly due, obviously, to automatic stabilizers, but it already signals the strong commitment of the Spanish government with this fiscal responsibility, as we have proven in previous years.
Mm-hmm. Okay. Another investor, this one from Spain, from an international firm in Spain, is asking, as stated in the government's program, there is an intention to abolish the latest labor law reform. Has its impact been included in 2021 forecasts?
Well, actually, when it comes to labor market reform as well as pension reform, and generally the structural reforms we will undertake, they will be based on strong consensus. From the first day, our government has shown a strong commitment to bringing together the different points of view and trying to have the largest possible social and political consensus for all reforms. We have been doing that in the course of 2020. Thanks to social dialogue, our measures have got the support of the unions and also the enterprises. And I think this has been, first of all, a sign of strong responsibility on the side of Spanish social partners, but also I think it has been one of the elements that have allowed us to be so successful in preserving the economic tissue and jobs in our country in the course of the very tough months of the pandemic. No? So we will we will continue on the same line. Tomorrow, as I was mentioning, we will have the third meeting of the specific social dialogue table, which has been established to deal with the plan. And through the different social dialogue tables, we will work together with the social partners, all these structural reforms, and in particular those related to the labor market and pensions, which necessarily have to involve a variety of measures and changes if we want to finally overcome the structural imbalances that the Spanish economy has been bringing and suffering for decades. Some of them we have inherited legacies from the financial crisis, and we have to deal with them in an efficient manner, but also with the broad consensus with our social partners if we want these reforms to be permanent, to be far-reaching and lasting, and really be structural in the sense of improving the way markets function in our country.
Thank you. Another investor from an international firm is asking about the economic policy from the government plans. He's saying that according to those plans, the government expects a growth of the Spanish economy of above 7%, even more, compared to other reports of prestigious institutions announcing growth of around 4 or 5%. His question goes like this: could you explain where these differences are located in macroeconomic terms with the other forecasts?
Yeah, I think that there are two main elements that explain the variety of forecasts right now. Well, the first one is uncertainty. We are making these forecasts in an environment of maximum uncertainty, in particular with regards to the evolution of the pandemic. And so when we did our forecast, we anticipated, as I said in my introductory remarks, that a sufficient share of the population would be vaccinated in the second part of this year, And some other forecasts are more pessimistic, and they think that it is only next year that we would achieve a sufficient degree of immunity. Now, we could discuss for hours who is right or wrong, but we consider that all news that we have got since October are actually going in the direction of reinforcing our underlying hypotheses, if not improving them, in the sense that, as I said before, we did not at the time think that vaccination would already start in December, that we would have 2 vaccines already operational, more in the way, and that we would be shortly finalizing the first phase of vaccination in our country. So actually, developments are rather gone in the positive direction, but there are different scenarios in this regard when it comes to the health, the pandemic development. And then the second key difference has to do with the multiplying impact, the strength of the recovery, the bounce back of the Spanish economy, and the multiplying impact of investments under our recovery plan. And here, actually, what we saw in the third quarter of last year is very much aligned with what the Spanish economy has proven crisis after crisis, and it is its very strong resilience and ability to bounce back in a very dynamic manner once the restrictions are lifted. This is what we saw in the third quarter of last year, and it continued in the fourth quarter, and this is what makes us think that the recovery can be very strong in the course of 2021, and also that if we are able to achieve our objectives in terms of private and public investments, we will have very strong growth, in particular in the second half of 2021. I think these are the 2 main elements which may lead to different forecasts, but all of them identify Spain as being one of the countries with the strongest growth at international level in the course of 2021. All of them considered that the recovery will start in 2021. And I think that all of them, even if not explicitly, considered that the measures taken since March have gone in the direction of protecting a basis for this recovery, and therefore that there shouldn't be a very significant structural effect after the crisis.
Thank you. And the last question that we have selected is from an investor from France, who is asking specifically about the Spanish banks. His question goes as follows. Please, could you give us your opinion on how the banking sector in Spain will be in the next couple of years? Do you foresee more M&As?
This is a standing question in all my public events, and I always reply the same, which is extreme prudence in terms of anticipating developments that may happen on the M&A front, because it is not the job of the government to push for mergers or for specific operations. Well, I think that the expectation is that we still have weeks and months ahead which are going to be challenging on the whole economy, and of course this has an impact on the financial sector. But what we saw since March, and I was referring to this, is that after many years of deep restructuring, the Spanish banking sector has shown to be in good health, able to be not part of the problem but part of the solution this time around. The cooperation between the ICO and the banking sector has been, not only the banking sector, the financial sector at large, has been excellent and has allowed us to be extremely efficient in channeling the funds to the real economy. And I think that that's thanks to the strong balance sheets of the banks that have for years been cleaning up these balance sheets and reducing the share of non-performing loans. Now, for the moment, all indicators are quite positive in this regard, but of course we still have weeks and months of uncertainty ahead to see how things develop in the course of the year. There have been many announcements of different M&A. It is true that the European Central Bank and the Banco de España have been calling for further consolidation in the sector. I think more from an international point of view than only within the national boundaries. Let's see, what other developments take place in the course of 2021. For us, the top priority as public sector and as government is to ensure an efficient functioning of the market and strong, obviously, balance sheets and performance of the banks that would enable them to perform their function in channeling the funds, in supporting the investment effort and fostering growth and job creation in our country.
Okay, thank you very much, Ms. Calviño. Thank you very much for your words. Thank you very much for your presence here. It has been a pleasure and a great opportunity to listen firsthand to your thoughts. And we would like to inform you that the working session will continue this afternoon. And the morning session of the second day of the Spain Investors' Day is now concluded. Thank you very much all.